All right, good morning. It's first session for a while. I think it's one of the first since the early August period. So glad to be back. Glad to make these pre-market sessions. So I hope it will be useful, especially this morning. So as usual, let's start with price action. Then we'll cover TLM dashboard, and then we'll look at the focus list or the lack of, and yeah, we'll just go from there. So obviously this morning, not really pretty. So we still have this. Just to be sure, my mic is on. All right, so perfect. If there's anything, guys, the chat is open. And if you cannot hear me, it's on. Perfect. Excellent. Thanks for the confirmation. So, yeah, so let's look at NASDAQ price action first. I think that's the first thing to do this morning. So big rally from the lows. A bit sloppy in the last few weeks and months, especially the last few weeks since the start of August. It's been pretty choppy and, to be honest, not much traction as performance pretty showed. But yeah, we're still right into the 10-week structure. We're still above that base area. So until we break down from that weekly structure, I will treat that as a pullback, buyable pullback. And then if we start to break those weekly structures, then I will reassess. But so far, yeah, like I said, we have a confirmed weekly reversal. We're still inside that range. So look at this low right here, which could be the larger range in play, and that recent low as well. So we kind of broke the uptrend line. So that's why I say that this flag and build up that I was seeing could have resulted in a new leg higher. But Brett was declining, and what happened is price followed Brett, and now we're breaking down from the daily structure. So once I see the daily structure being broken down, then it tells me that okay, this market needs more time to digest, need more time to pull back, because right now we do have a confirmed pullback. Um, and yeah, let's watch at these structure levels. So recent low from August 20, and also that low uh, from August 1st. So those are the two levels that I will be watching for potential support. And obviously that will uh, create some short-term oversold readings condition that would be good to set up the market as we're still within the daily structure. So let's look at the Traders Lab dashboard. So first thing first, model is in correction, uh, simply because moving averages are not aligned. So we have the 10-day moving average below the 21, which is below the 50, and they are starting to slope down. We will gap down on the triple QE, so equal weight NASDAQ, and we will kind of officially give up the daily structure. So that's another warning signal. So we were still setting up a potential kind of low cheat range. And until Friday, I was really expecting this market to resume higher. Brett was trying to hook up despite being still below that 10-day moving average. But things could have resumed higher. Uh, but the thing is Brett is contracting and declining since the start of August. McClellan summation is in a downtrend, solid downtrend. We had a small hookup attempt on August 13, but then failed right away the next day, and since then we're in a downtrend. So if we zoom out a bit, uh, we tend to oscillate a bit between those extremes. So we were kind of stretch. We could have had some continuation move a bit like at the end of 2023. But yeah, we kind of resume lower like at the end of 2024, and now we're contracting. And will we retest those lows from 2025 at the start of that big April rally? Start of 2025, we had that bottom, which gave another good rally. 2024, after that big correction, we had that kind of oversold condition on the McClellan summation as well, which gave us a nice rally. So that's something that I look for. If we continue for a few days, weeks, that would bring us in the same area that those big rally started. So that would really set up the market well. Uh, Bread extension. So like I said, we had kind of that neutral bread, which hooked back down on Friday. So at this point, we have room either side. But the problem is price now confirms a breakdown. So I will look on the downside. And see for an oversold condition. That will be the market setup that will pull me back in and be more aggressive, expecting a real rally. So look for the stocks above their 5-day moving average, 21 DMA and 50 DMA, to go into oversold territory as the market kind of pull back and puke a little. That will create the room, that will create the fuel that the market need to really reset and set a good market setup. So model, we covered Brett. Perfect. So I shared that this morning in my journal, but I want to cover it as well, kind of an overview of what I'm looking to assess the market. But for me, it will be a good added value to be more disciplined with my system, because in August, what came out from my post-trade analysis is basically that I didn't follow my system. If I would have, I wouldn't have traded and be all cash all August long. So that's still hard for me to kind of be on the sidelines, especially with the community and kind of the pressure to be engaged and have exposure, but that's on me. So this tool will help me to really have a clear picture, articulate what's my game plan with my rules, right? So first one is price action. So we're below daily structure, but we're still above that weekly structure. So price wise, right now, that's a no-go. Brett, so we're in a downtrend on the summation, and we're still below the 10-day moving average as well. So clearly nothing to see there. Breadth extension, we don't have any oversold readings. So no kind of anticipation positioning on oversold extension. The VIX, so let's look at the internals. VIX spiking above the daily structure. That would be the first reclaim of the weekly structure as well. So that's why I said that from this point, just be more cautious, be more defensive, because we don't know if that will carry on or if it will be the spike to play. But until we see that reaction with market open and see how far oversold we go, that's a clear risk off signal. And we do have the same signal on the credit spreads. We didn't reclaim the weekly structure so far pre-market, but we did on the daily structure. So will we spike and just gap down and start a downtrend like at the start of August, or will spike a bit like last year that will really give a good pullback opportunity? It remains to be seen. And yeah, Bitcoin now red, so gave back all the gains from that bounce and rally. So Bitcoin led from early on in April. It was kind of the first asset to reclaim both the weekly and daily structure, and now kind of the first to give back that structure as well. So now Bitcoin trades below the weekly structure, trend pretty nicely below the daily structure as well. So there was kind of a weekly setup that I was playing, that base bottom area right in the 10-week moving average structure, but we rejected the daily structure on Friday. So that kind of invalidated the weekly setup because we weren't able to reclaim the daily structure, and just confirm that Bitcoin is in a daily downtrend. So we do have lower highs, lower highs, lower highs. We keep being rejected on lower highs, and we make lower lows as well. So we're in a clear downtrend. So until we break that structure downtrend and we reclaim the daily structure, then for me, Bitcoin is a no-go. Clearly, it's a wait and see. Just be patient, let it build, and we'll be there on the right side to grab it, a bit like we did during the April rally. So game plan with my exposure. So clearly, there's some nasty action. I want to see the open. So I'm kind of in a spot where I shouldn't have any exposure at this point. Shouldn't have opened it from the start. So it was kind of bad trading, but now I have them. So I closed a lot of exposure last Friday. I'm down to 50% exposure, but that will still suck and hurt a bit this morning. So Uber trading at the bottom of the 21 DMA structure. I still like the weekly chart. So I will see how it react at the open. Shop was looking pretty good, but weekly kind of a bit extended. So it will be good if we retest that base structure, retest that 10-week moving average. And I will look at this recent low as well, just to see if we can hold. before cutting my position too quickly. Uh, Amazon, now everything I see on it is kind of a big bear flag. Um, After that gap down, so kind of a continuation pattern to the downside. So this one I will cut probably at the open. Um, and Ionic, I still like the chart. It showed a lot of relative strength on Friday. So this one I will look if, and I had a pretty good entry as well. So this one I will look for that structure and that rising 21 DMA structure to hold and create potentially a higher low. That's what I will look for on Ionic. Um, and yeah, focus list was Roblox giving back that range. Robinhood, like I said, we're building right at the 50 DMA. So unless we see kind of a oops reversal this morning, so if we see that big red open and everything bounce back and come back into structure, that will a bit change my mind. But so far we're giving back that uptrend line. We're slicing through the 50 DMA as well. And same thing for Palantir. So it was building below the daily structure. Big violent breakdown. We were building at the 10-week moving average. So I was still kind of bullish on that setup. But now if we give back that 50 DMA, that Palantir will become kind of a bear flag in a continuation pattern. So seeing Robinhood, seeing Palantir as well, that were both recent market cycle leaders giving back their 50 DMA. And let's see how it goes today, right? There's still a lot of trading left, but seeing that if we really slice through the 50 DMA and we close below, that will be another warning signal and cautious signal to listen. So going back to the pre-market checklist, so market model is in correction. My bias is really on defensive, not bearish because we didn't give the weekly structure yet. So for me, it's really just defensive pullback action, and ready to strike back when I see. And once again, what do I want to see, right? So right now we might give that structure away, might start a new downtrend, and what I will look for is a reclaim of the 21 DMA structure, so daily structure, seeing an oversold reading on either short term or mid term, and seeing the McClellan summation after that downtrend showing constructive sign, round down action, trying to kind of absorb that selling and hook back up. That will be the sign that I look for along the liquid leader. So we'll look at Palantir, we'll look at Hood, we'll look at potentially new leaders as well to set up and reclaim their daily structure. So same playbook as in April. Just let's be defensive. It's not a time to trying to pick the bottom. We're now clearly below daily structures. We're clearly in a breadth downtrend and contracting market. So let this play out and wait for that breadth confirmation. Let's wait for that price confirmation as well. And we'll be there to play that next rally, next leg higher. Um, So yeah, that's a bit what I explained here. No trade for me today. That's kind of the first break of the daily structure. McClellan summation is in a downtrend. So for me, and also internals above daily structure. So for me, clearly no trades today. I plan to be patient and like I explained, um, likely reducing exposure as well today. So there was a question about gold stocks and the question is, what's your opinion on times during like these to trade and track gold-related stocks? This way, kind of catching divergence in the setups. Um, yeah, like you know me now enough to know that I like to be focused on one strategy and one only. That's what I do best. Um, if you were so focused on gold stocks, you would have missed the April rally, which honestly made my year and was such a great rally to catch early. But if you're so focused on gold and you kind of uh, be so focused there that you're not uh, trying to anticipate and play that new rally, then you miss it all, and you miss a very good market opportunity to make your year and make good gains. So I know we're traders. We like to trade. We like to always find a trade somewhere. But over the years, I just found out that what I do best is hit it hard when there's a good market opportunity and step away. Don't trade, be light or not trade at all when the market is not good for my style. And if I can focus only on that and be the best I can be and trade that, uh, I will have super performance and be the best trader that I can be. But I know for myself, and I cannot speak for everyone. So some people are really good to kind of trade the rotations and be in the good sectors that outperform tech or outperform the rest. But that's not me. I just found out that I do best when I really focus on something very specific. Yeah, good point, my friend. So the point is, it's the same as staying short the market when it turns, not believing the turn. So I know I say that, and we have to repeat that at each pullback and each correction because everyone asking me, hey, do you short the market? Why don't you trade the market when we're a downtrend, etc., etc.? But the point is, when you start opening short exposure, usually a bit like the long setup, right? You have to be pretty early to have good cushion on the short side and play a pullback. So what happens is if you're short the market, by the time the market is setting up, the market will become oversold. The liquid leader will start to make higher lows. Uh, the leaders will start to reclaim their daily structures. You will start to get these little hints left and right that the market is absorbing those sellers, is starting to build the lows, and action is becoming constructive. And while you're shorting the market, you're there trying to manage your short exposure. You trim into weakness. You're trying to decide if you keep that trade or add to it, etc., etc. And while you do that, you kind of missing all the clues that the market is giving you that it becomes constructive and tracking the potential new leaders, etc., etc. So again, uh, trying to be the jack of all trades just prove me that it's not a good strategy to be a good trader. Uh, and again, that's for me. I'm not a good jack of all trades. I prefer to focus on one thing and one thing only. All right, guys, any questions? All right. So if there's no questions, so I dropped this PMC dashboard in my journal. So if you want to see a bit how I view the market and how I will play it, I will try to be as clean and clear as I can each morning, and I will post that in my journal. And as always, if there's any questions during the day, during the session, I will be there to answer either in the Q&A channel or I will be in the pit as well. So have a good day, everyone. And remember to be cautious. Today is the first day that we break the daily structure. So risk first. Remember that you want to keep that drawdown the smallest possible and keep that capital the best that you can for when the market is really ready to go. All right. Have a good day, everyone. Bye bye.